Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Apple report for Monday, July 24th, 2023. Before we jump into the charts, I just want to encourage you to please click like, please share the content with friends and colleagues, and become a subscriber, a Wicked Stocks YouTube channel subscriber. Follow us. Also, check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this that you never see really on YouTube, including daily analysis in the SPY and the Triple Q, weekly analysis in the S&P 500, NASDAQ 100, and the long bond ETF, the TLT, as well as two individual stock picks a week in 5 to 10 minute video format, just like this, that you never see on YouTube, that cater to the 3 to 5 week, out to the 3 to 5 month near term investor. Always looking for 20% swings on those underlying stocks. You can go through the payment gateway at wickedstocks.com and you're offered an immediate 5-day free trial. You can bow out at any time, but I suspect you'll like what you see. Anyway, here we are, Daily Apple Report, Monday, July 24th. We'll start once again with this chart, big picture. Long-term buy signal a few months ago. I don't know how many weeks exactly, but it was several months ago, more than 2 months ago. We closed above this 169.34 longer-term descending channel top, this descending flag at the top of a move. This happens to be the former all-time high, did indicate longer-term bullish continuation. I'm anticipating the 223.27 rising channel top still as a possible by the end of your objective. Now we're several months into this, and we're going to be in August before we know it, with 4 or 5 months left. And so can we reach this over the next 3 to 5 months? I'd say yes. We do, though, on the way up, as you've been watching, a need to get up and over this 201.26 rising channel top, where we did top out several weeks ago, and below which the 188.95 rising channel bottom remains in reach within a week or two, any week or two of holding below 201.26. And I've been mentioning how we could trade inside this band for weeks to come. We can bottom out this week if tested at 188.95 and round back up to 201.26 within 2 to 3 weeks and fall off again, so forth and so on. Of the two, 188.95 to 201.26, it really is 188.95 that I'm holding as a 4-star multi-week level, able to contain selling through August because of that longer-term buy signal I just showed. And the 201.26 will remain a weekly 3-star resistance area, able to contain weekly buying pressures only, but sort of a giving way possibly to longer-term bullish continuation if settled above this 213.10 rising channel top, then anticipating within several more weeks. And as I mentioned before, this rising channel top projected off the January low will be converging with our longer term objective, at what is it? Sorry, there we are. 222.37 anyway, as we move into later August. So, are we going to reach this by the end of August? It doesn't seem to be the case right now, but this can change on a dime, especially if we reverse significantly and reach 201.26 later this week. And I'll get to those parameters here in just a moment. But you're looking at this chart. Let's jump to the day itself, and I'll go over this. I've reduced this channel bottom that actually held selling pressures about a week and a half, 2 weeks ago here. Now, I've been holding it as a session containment level all along, and I've reduced it to intraday only. A couple of things. We did close below the low of the high that was put out Wednesday of last week. That is oftentimes a sell of continued selling to the next meaningful support. Is 191.70 meaningful? Well, in the context of that 188.95 to 189.41 region, no, it's not meaningful, but it can contain intraday selling pressures, possibly for the day again, and above which, we've got carefully chosen minor resistance levels on the way up. I've got 193.90, nothing more, right about here, I suppose, nothing more than a 3/8 upside Fibonacci over the last few days. It also coincides closely with this former high settlement price of 193.97. I'm kind of off that as a meaningful level, and resting more on 195.10, the high settlement price now that was put out Wednesday of last week. So holding above 191.70, 193.90 in reach, able to contain intraday buying. If we push through 193.90, 195.10 is in reach and likely intraday where we can place a daily high. And if we close today above 195.10, I don't think there's a good reason to be short this market as we move into later week. I think under that scenario, we can push. Now here we got 193.97 again, and I think you should just erase that from your mind. But would be the 201.26 formation. This is probably it better. So I'll go back to this chart actually. If we close today above 195.10, it is the 201.26 formation, I think, that becomes a 2 to 3, 3 to 5 day target, attainable by the end of the week, by Friday's close. So a settlement today above 195.10, 201.26 becomes our 3 to 5 day objective. That's a good 3 to 5 day swing trade to the upside. Until then, 3 to 5 day swing traders, I think, should wait for the bottom picking opportunity that may present itself in the upper 180s, because breaking today, for instance, below 191.70 would indicate 189.41. This simple 3-week channel bottom is a meaningful support level, and I like how it coincides right now with this longer term channel bottom at 188.95. So this zone becomes an intraday objective. If we break 191.70, I think you can anticipate this zone of support between 188.95 and 189.41. Once again, 4-star multi-week containment, able to contain selling for more than a week, say possibly through August trade. From here we can turn back up once again to the channel top at 201.26, probably better shown here, and quite possibly on into the 210s or higher as we move into late August, late September, something of that order, I think, is likely. We do need to get above 201.26 to break this pattern that's pretty well defined right now, the base of which is 188.95. So, if you're looking through the rest of July, it really is a 188.95 floor, 201.26 ceiling. If we're testing 188.95, 190, 189.41, this area here, if we're testing that today, you might consider reaching for 202 to 205 out of the money calls that don't expire for at least several weeks. That would be the play. And inversely, of course, if we test, as I've been saying now for weeks, if we test the 201.26 formation, you may reach for the 190 out of the money puts that don't expire for at least several weeks. That is sort of the play. Once again, I'll get back to the week itself. If we close above 195.10 today, I think you should anticipate this 201.26 formation within a matter of 3 to 5 days, where we could top out through next week. And if settled above, should then yield this 213.10 rising channel top over the following 2 to 3 weeks. And over that time frame, as we push into later August, we're now pushing into the 220s. 220 is a big, big area. As you're well aware, I've been pointing to this channel top now for several months as our longer term objective. Now, what if we close today below 188.95? That would be a significant sell signal. And if in the process of testing 188.95 to 189.41, excuse me, you reach for those 202 out of the money calls, I would recommend liquidating, covering that long position. Closing below 188.95, I think you can reach for 175, 180 out of the money puts that don't expire for at least several weeks, because that is our next play to the downside. Closing below 188.95, good high for the month of July. The following 2 to 3 weeks should then continue south into this zone of support. This is a combination rising channel bottom and rising 1/3 speed line projected off that January low. Both trend defining in their own right, both very similar in price, able to absorb selling. This could be through the rest of the year, through August and into September anyway. As the market remains bullish long term above 169.34. So I could go back and forth, between this chart, 174.48 and rising, and 169.34. There's not a big difference between them. And so, I will mention, I'm not going to be crazy how should I put this? I'm not going to be crazy with the idea of closing below 174.48 and then still respecting this 169.34 long-term support. We'll just play that out as we see it, if we see it. And honestly, I don't expect to see a test of this area, of course, unless we close below 188.95. Until then, I think this is the last thing I will say. This 188.95 to 189.41 region, great area for day traders. a solid zone for 3 to 5 day swing traders back to 195.10 perhaps. The high settlement price from last week within 3 to 5 days of testing, 188.95 to 189.41. A great 2 to 3 week position traders who like to hold out for a possible rally, then back into this low 200 zone. I think I've said everything there is to be said. 10 minutes and moving. I'm going to leave it at that. Please click like, share, subscribe, and check out wickedstocks.com.